Good morning, and thank you for joining with us today. Our Day Traders Action Live trading room is an active trading and educational room for trading the U.S. stock indexes using my proprietary methods. You should know and understand all the required CFTC disclaimers about trading, namely that futures trading is high risk and only risk capital should be employed, and that there are no guarantees in trading. Also, please understand that we here at Day Traders Action Incorporated cannot guarantee in any way that you necessarily will make money. Your trading actions from my signals from the room here are your own responsibility. If you cannot attend the room each day, we do have auto trade available where my signals here in the room can be duplicated in a personal account for you. There's more information on this service on the email I sent you today with the login link. It's important to understand also that the Day Traders Action Live room is not necessarily a market trading room or a boomerang trading room per se, but a field for me to try to make us as many NQ points as possible while we're here in the room the first few hours from the signals I give. I expect you will learn a lot from the markets just by listening to my ongoing narration here in the room, because I try to do a sort of hybrid mix of training while we also make the trades. But the main goal is for me to go in and get these trades going for us and have some winners all day. So the two setups that I use are the boomerang trades and my exhaustion reversal trade setups, and along with the modifications of both depending on the market conditions, because the markets are a little bit different every day. So please hold your questions and send them to me via email so I can give you a detailed answer later when I'm not busy trading. Now, I'll guide each and every trade from the entry to the conclusion of the trade, and I'll alert you to the entry in advance as much as possible. The theme of our room is that I consider us to be blue-collar working traders. And what I mean by a blue-collar working trader is that I look to go into each trade and try to grab the easiest money possible out of the trade and as quickly as possible in most cases. Our goal each day is to attain the equivalent of a $500 to $1,000 gain on a 4-contract small account, a small account being around $5,000 or so. I'll try and hit our target gains as early as possible in the session, which is usually around 8 to 15 NASDAQ points will accomplish that goal, and do that in under, say under 15 trades, or ideally less. Less is best in that case. But we just, again, can't be sure because of the market conditions every day change. There's going to be some losers along the way, so just stay the course. That's part of trading. I'm sure you already know that. But if we hit that early gain level, I'll normally stop the room for the day. We'll just close down the room and come back the next day. So that's the way we operate our blue-collar working traders room, and just have realistic expectations. It's not a get-rich-quick scheme, but it's a professional high-risk business. It requires a lot of patience and maturity to tolerate any drawdowns that may occur intraday or sometimes on a multi-day basis. I really appreciate having you here in the room as a member. I really do. It's great to have you here. I look forward to seeing you every day and watching you participate with me. I consider you to be very brave soldiers, very brave blue-collar working traders coming to the work with me and getting into the job assignments that the market gives us, taking those job assignments, and ideally getting out with some profit. So let's have a great day and start our market analysis now. Well, they hiked the market up, as you know, on the Globex period here, and they're working them higher here again today. Now, the underlying bias of the market is that if we get a higher opening and mild run up, it's probably going to be bearish for more downside action. If right off the opening we get a strong, hard hammering to the downside, that should tend to be supportive. So we're going to have to see how things go. They're opening up the markets now. We got the Dow up mildly, and they're already, the Nas is turning back lower. So we did have this big kind of revamp here. It wasn't that large actually, but we had this revamp coming into the close, and then a choppy sort of up move on Globex into pre-market. Pre-market to me is, like an hour and a half before the regular NYSE opens. And then we've got the opening right here, and right off the bat they're pulling them back. But the Dow's getting hiked up. and we'll just have to wait and see how these numbers here work out. As you know, here in the room, we monitor the what I call the high five, which is the Dow Jones Industrial Average, the Composite Index, the Trend, the Transportation Index, and then the Advanced Decline Line. These are the lifeblood of the markets, and we key these numbers off each other to get a general picture of where the market's going and where the strengths or weaknesses are, or if it's more of a neutral market. We also use the higher time frames, which I consider to be the 5-minute chart, 13-minute chart, 30, 60, and 135. 135 is the largest I'll go for day trading. But if that rolls over, generally you're going to get a pretty bearish kind of market. That's what happened yesterday. Now, by the way, if you can see my cursor moving and hear me okay, please go ahead and type a yes in the Q&A section, just so I make sure I don't talk for another hour and then I find out you can't hear me. I'm kidding, of course, but could happen, you know. Anyway, just go ahead and type a yes in there or a Y if you can hear me okay and see my cursor moving, and that'll help help us verify that we're all on the same page here. Oh, that's great. Thank you very much. Appreciate it. And let's get started here. Now, again, as I mentioned, the underlying bias for the market today is that we have lower to go in general, whether that's on a higher opening and a hard early smash to the downside, or if they smash them really hard this morning, right off the opening like we're getting right now pretty much, depending on how strong it is, it's going to be a supportive move most likely. Now, the area of interest, and this is on the ES, this is shown right here. The live ES here, 2104 quarter, 2104 half, is down around 92. We'll be watching 92 if they get them down there, which is, you know, a good strong smash about 10 to 12 points lower on the ES. That's a big move. We'd have to see if they can catch support there. I would expect they would, but if they dip down lower and push under 87.5, we could get another stronger move to the downside. So keep an eye on that. We'll be watching for that. On the upside, we're watching 21.22 quarter. And again, we're way off that. So these numbers are kind of giving us outside ranges of what to watch for resistance and stronger support on a wide range market from yesterday. Okay, give me a quick second here. All right, so the first thing we like to do whenever we're starting out the day is we put in the opening range lines here. And I've got a pair right here from yesterday, so I didn't erase these. So let's bring these down and get these going here. And then we got a paper trade line up here if we need it for the early session. Because what I often do is I'll do a paper trade or two just at first to get the kind of feel for the market. So let's see what we got here. We've got the opening coming in here. Clearly this is the high up here, right off the opening. And this is the low. So the first 5 minutes of trading, we've got 89 quarter working the highs, and the low of the opening 5-minute range, 76.75. Okay, and I'll keep this paper trade line handy because we usually, like I said, like to do a trade or two with the paper trade, you know, just while we're waiting for the first 15 minutes of market. I like to let the market get going. There's usually plenty of time to trade on a regular session. We'll trade up till 1 o'clock or so. Um, if we make all our goal, like I said, we could be done in 20 minutes, but usually that doesn't happen. So we'll be watching here. We take our time. There's no big hurry. Now, this looks like an attempted boomerang type move getting started here, but I want to tell you that after a choppy move higher like this, a pullback, and then another bounce up here, this is not the correct stacking sequence to go long. Now, sure, 86 quarter might go long, and we can mark that in terms of a paper trade. I wouldn't take the trade if we were live here, going live with it. But let's watch and see, excuse me, if 86 quarter can jump up to 89 quarter. That's what we'd be looking for, a 3-point move. But this is not the right setup for a boomerang trade. But now it's just kind of scientific curiosity to see if they're going to try to jam this thing up higher. One thing we're going to be watching out for too is the Federal Reserve riggers, what I call the riggers that manipulate the markets, and they may have some agenda to try to jam the market higher here today due to whatever their general project is to try to bolster the market. Maybe they don't care. They kind of sat on their hands yesterday. We saw very little rigor action yesterday, just regular bulls and bears mostly. And of course, the bulls, the bears overwhelmed the markets because of the general nature of the situation. So it was quite an interesting day. We had a strong down, almost 200 points on the Dow yesterday. So we're watching now again. The underlying bias is to watch for an early ramp up higher to generally fizzle out and move to the downside. And if we get a strong, Dow minus 100 or something in the first hour, which it doesn't appear so far, it looks like we're going to get. It could still happen, but we're just watching to see if it could happen later on this first mid-morning session here if they push them up higher first and then the thing fades. So anyway, 86 quarters trying to run 89 quarter. Did they hit it already? I think they did here. 89. They hit 89, so they missed him by a tick as far as pushing higher. It looks like they're going to try to run that up, and that's in line with the higher time or the trend bands all matching. The problem is, of course, okay, there's that 3-point move there. Problem is that stacking sequence after this type of move was not that solid, but anyway, they ran higher, and that's good. Now, of interesting note, too, is this candle here, 82.5 to 87, a 5-point ramp-up candle. So when the market started to move up and then started failing, somebody came in here with a tremendous amount of size at 640. You can see it right here. Came in with a tremendous amount of buy contrary, around almost up to 1,000 on that move, pushing the market substantially higher. Now we're getting a strong reversal candle here, which is, they did make it up 3 points, but we're getting a strong reversal candle here, which is even bigger, 91.5 down to 86. So again, well, similar, about a 5.5 point candle. So right now, officially, we're in the midst of some whipsaw here. And overall, we're going to start watching the indicators. We've got the Dow up, the trend's a little bit high here, 1.06, but up to 1.30, it remains neutral. Very weak advanced decline line, even though we're only trading 10 minutes. There's no punch to this market here, so we're going to be watching for probably a short any time. The higher time frames, you got a neutral 5-minute trying to turn bullish. The chart pattern is generally kind of bullish here, but it's a little more neutral. And same on the 13-minute, neutral 30-minute in a bullish pattern, and 60-minute pattern is still bullish. and we've got a neutral bearish pattern on the 135. I know it's a little complex, but over time, as you watch here in the room, you'll learn how to synthesize the high five as I show how we do that. So overall, this they're trying to turn bullish on the 5 and the 13, like I said, with the neutral pretty much in the other higher time frames. This strikes me very much as rigger action here. It looks like the riggers are trying really hard to prop this thing up. Everybody's expecting a rebound of some sort, but good luck. It may not happen. What I'd like to do is very carefully go in here and let's go short right here at the market, going short at 97, 96.75. We're short at 96.75 here to 97.5. Somewhere in there you should be short. So 96.75, we're going to be watching for a pullback to 93.75, okay? Just a small 3-point pullback is all we want out of the deal. That's our blue-collar working policy. Now, if they pull back and then they push back up over 97, we're going to have to be very careful with our stop to make sure that they don't try to blast them up too much higher. Let's see if we can get them down to 93.75, take them out, and get the easy money out of the deal here. Let's get one more little push lower if we can, hopefully. I probably should have clipped them right there, but wasn't quite fast enough. So let's hold short a little while longer, but be very careful here and make sure they try to continue on the lower path back down to the downside here. Now, let's see if we can knock them back a little bit lower and get that 94 area going for us here. Again, in hindsight, I probably should have clipped them. It was a fast move lower, but I still think they're going to make another dive down there. Let's see if we can get them going here. Oh, see, now they're trying to push back up, so we're going to be very careful with our stop here and try to keep it as tight as possible. Let's see if we get another dive lower down towards 95. Hopefully we get another dive on the downside. Okay, they're still pushing because we are working a little bit against the higher time frames, but I thought it would be a good trade. Let's see if we can get them down to the 95 or lower area and be a little careful on this stop here. They start getting away from us here. Let's see if we can one more time try to pull them back down lower here. Should be ready for a lower move, and I'd like to see 93.75 come in, but we just have to be a little bit careful. If they start pulling back now again, there's a good chance we can hit that 93.75 action down there. Let's see what we got here. See, we get a little dive lower this time and taking out that 93. And there it is filled there at 93.75 for plus 3 points. Now, of note, again, we're short at 96.75. We covered them up at 93.75 plus 3 points. Now, 3 points in the NASDAQ is worth $20 a point, so it's worth $60. And you see here in the meter 65. Oops, let me fix that here. But just ignore this because what I do is we put the trades on the simulator. We have trades going on live auto trade accounts that we do here in the room. We have that service available, unlike most other rooms who don't have that. I don't really know of any, but we have the trades. So I just use the simulator so I can adjust all the different parameters if I have to, and that's just the way I like to trade them. It's no big deal. But what we like to do too, now keep in mind on that first trade there, which was a winner for us, as you can see, I don't like to bash other traders out there in the rooms because, you know, we're all in this together and everything. But I wanted you to notice how crystal clear that trade was. I called it out exactly when the trade was setting up. I called out 3 quotes on the prices, 96.75, 97 quarter, 97 half, and I said you should have one of those ticks. Now, and you should have had one of those ticks, and you would have, unless you hesitated for any reason, got in at a lower price. But I expect you wouldn't have done that because there was plenty of time and warning to get in. I have been and seen other rooms, and they'll tell you that they're making all these winners, but the truth is they don't call out exact crystal clear trades. They'll call it real quick right in a split second, and then it'll run in the direction, and then they'll get out real quick and they say, "See, we had a winner there." But you know, there's no value to any kind of trading room unless you can actually get in the trades yourself and have plenty of time to do that and um, navigate the trade yourself with me. Now, I'm going to guide each and every trade as I mentioned on the opening there, but I just wanted you to take note of that first trade, how that was an example of what I'm talking about. Again, some of the rooms are really ridiculous, and I'm not here to get on a soapbox about that, but I just want to point out that I am very meticulous about making sure our trades are very accurate, exact, crystal clear called out, and that there's nothing vague or mysterious about where our entry was. So with that in mind, let's move on to the next trade and see if we can get some action going again. Now, on a 4-contract basis, just so you know, that would be $240 minus commission, and that's our blue-collar working program. Again, if you had like a $5,000-$6,000 account or more and you put 4 contracts in there, you can easily trade 4 contracts, and that's what we strive for. Many of our traders are doing that and some more. I've heard stories from some of our traders have emailed me. One of them was telling me he was looking on putting 50 to 100 contracts. I said, well, that's okay, but just make sure if you're going to do that, make sure the volume's really high here, especially in the early first hour or two is good. But late in the session, if this volume starts, this is a volume meter here, by the way, that we use. If that volume starts dropping down below this magenta line, you're down below 300, just use caution, because obviously if the average contracts being traded is 300 contracts and you're putting on 50 or 100, whoa, that's gonna that's gonna move the market around a little bit. Perhaps it may wiggle it around, not necessarily absorb all the volume, but it'll definitely create a stir. It'll create some curiosity. Now, once again, here they are trying to jam them up to the highs, so they're setting us up for a possible another short here. So stay ready to watch for another short here. They're jamming them up here, and maybe the tape's a little more bullish. This definitely looks like rigor activity here. They're really propping this market up, and there's no real rhyme or reason for the market to get jacked up like this. So again, you may not understand this fully because you're new to trading or you've only been around 5 years or less, but this rigging has been going on for a long time, especially got cranked up in the 2004 period. It's a whole story I'll tell you sometime. But the point is, I was working with the Chicago Tribune and others trying to help some floor traders that contact me identify the rigging problem. And it is indeed a problem. Let's go ahead, stay ready, and go short right here at the market. Going short at the market, short at 09 quarter, 875. So we're short at 09 right now, and 875. We're looking for a trip down to 6 1/4 here. Okay, we're short at 09 quarter. We're going to look for a trip down to 575 just to make sure everybody who got in has a chance at getting 3 points out of the trade, depending on where you got in here. Now we're taking them down a little bit lower here. Let's get ready to possibly exit the trade anytime. I'm trying to be careful here because I see this rigor activity involved, and I don't want to get this trade jammed against us here. Let's see if we can take them down to 5.5. We're looking for 5.5. So we can smash them down a little bit lower here under 6 and go ahead and cover up the trade. Any trade under 6, go ahead and just cover it up. Saw 6 there, but I didn't get a chance to cover it up yet. Let's hold short here. We're going to look for a trade down to 6 or lower to cover up the trade. If they print 6 or lower, just go ahead and hit your exit button. Let's see if we can move them down. Like I said, we got a little problem with them jamming them up here again. Let's see if we can pull them back. The riggers may come in and try to defend that higher move that just got made up there, but I think they're going to be pulling them back first. We already missed kind of getting out at 6. They went down to 6 and we didn't quite get them. I hope some of you got them. The point is, if you get 3 points, just get out of the market. Again, 6 or lower, let them go. Let's see if we can get them down under 6 1/4 to cover up the trade. Well, ideally under 6. You want to hit them under 6. 6 or lower, just go ahead and let them go. There we go. Exit at the market right there. 575, 6, 550. So again, we got short at officially we got short, I would say 9.25, but let's go 8.75 to 9.25. Get a little tick room, so 8.75 5 to 6, 8.75 9. So we'll call it 3 points. We'll just take it right in the middle at being short at 9 even and covering them up at 6, although they went 5.50. So that's another plus 3 points in the trade there. And that puts us up 6 points total so far for the day. Again, on our blue collar working level account of, like a $5,000-$6,000 account, whatever, trading 4 contracts on 6 points, you're going to be up 200 and, well, let's just do the math here. Exact math. The way you do it is you just take the 6 points times $20. It's $120, right? Per point times 4 contracts, $480. Now on 2 trades, that's a total of 4 contracts times 2. That's 8 trades, and you shouldn't be paying more than, say, on that kind of size, $3 or so. So 8 times 3 is minus 27. So net, you should be up right now. If you're trading a 4 contract account, you should be up right around $453, maybe a little better. That's why I wanted to get out early. See, look at that. This is the riggers in here, gang. I can almost guarantee you this is the Federal Reserve riggers pumping the market up. They're concerned, obviously. They're trying to rig the market up here. So what I want to do now, because what they do, their method that they rig it up is they push and push and push till they turn all the algorithms over. And out there in these institutional traders and the markets and the brokerages, they got algorithms programmed in their systems. And if they can push the market up like they're doing artificially by jamming the market up, they can turn those algorithms around from being bearish to bullish. Once those are automatically turned around and bullish, the market's going to tend to hang up and get supportive. I'd still like to work another short if we get it up here. Just have to be a little bit careful and continue to work a very tight stop. But let's go ahead and let's see if we can get them a little bit higher here. Try to work them just a smidgen higher here. There we go. They're really jamming them up here. It's really, it's a little embarrassing because, markets should operate on their own reconnaissance, not on some rigged pushing market deal. Okay, I missed it. They jammed them up to 1475. I had my finger on the trigger, didn't quite get it. Let's see if they try to run back up there. Let's see if we can see if they can try to run them back. Okay, go short at the market. Okay, now we got some slippage. Short at the market, 13.50. We're going short here. We're short at 13 even, and stay ready to jump out anytime. I don't like what I see here, but stay ready to jump out anytime. Let's see if we can move the market a little bit lower here. 13, we're looking for a move down to 10 if we can get it. See if we can blast them down to 10 and close out this trade. And go ahead and exit right here at the market. Exit at the market right here. 11 quarter, 11 quarter, 11 even, 10.75, 10 and 10 even. Probably should have held, but I just, again, blue collar worker, wanted to take the easy money on the deal there. So we got short at 11, or I'm sorry, at 13 because there was some slippage. We got short at 13 even, and we covered them up at 11 quarter. So let's see, what did I? Yeah, so plus 175 on that trade. Again, I got out just a smidgen too early, and look at them smashing them down lower here. But I looked up there and I saw that massive rigging, and I thought, no, we better. And they started moving them lower. I just said, let's be careful here. So anyway, 13, 11 a quarter. You might have got a little bit lower if you were fortunate and you held them just a little bit longer. You could have seen that stronger smash come in here. taking them down substantially lower, but it just depends on the situation. So that's 3 trades in a row. We're up now 6, 7 plus 775 to 8 points. And that's right in our target area, believe it or not, just in the first 15 minutes of trading. But that's just the way the market's going today. Not every day's like this. But let's say 7.75 times 20, 155 a contract times 4. Again, I always use the 4 contract blue collar working example. That's $620. So it's a nice early morning gain minus a commish. And let's just kind of take a little, not a break away from the screen, but just give me a little bit of time here, a break, so I can crunch a couple numbers, catch up on a few things, and we can see what the next setup's going to be for us. So I'll be right back.